Alright guys, this video is going to be on the EMAs, and we'll get right straight to it. Let's hop to the charts. If you're new to trading and confused about the indicators, I'm going to show you the only three that you really need. It's the 9-day, the 20-day, and the 200-day. Let's just keep it simple. EMA stands for the exponential moving average, but don't let that confuse you. All it is a line that follows the average price. It helps you see the direction of the price going up and the price going down or going sideways. And if you're on TradingView, what I use is I go here to indicators. You can type in EMA and look for 9, 20, 50, 200 EMAs, author, stock docs. You can change the length. I keep mine the same. The style, I keep my 9 at yellow, my 20 at green. I do not use my 50 most of the time, but my 200 I keep red. I'm going to cut these off for teaching purposes, and we're only going to focus on the 9. Now, just looking at the 9, if the price is staying above the 9, it's moving strong, and the momentum is on a continuation on an uptrend. But if we break below, momentum is slowing, and we could be on a downtrend. And at times, we can pull back just to the 20 before continuing up. So we'll put our 20 back on. We came down, we pulled a little bit below the 20, but we came back up. And now we're back up on an uptrend. And a lot of times, instead of chasing the price, if you just wait for it to come back to the 20 and see where it goes from there, that's clear confirmation. Now the 200 EMA is the slower one out of the three, and it usually stays down here at the bottom when we're on a bullish uptrend. Now when your price is above all three EMAs, your 200, your 20, and your 9, more than likely you'd be looking for call options for a continuation of going up. And the same as if we're below the 200-day moving average. Right here, when the 9 and the 20 are below the 200, you can look for continuation of going on a downside with the price and look more into put options. Here is the easiest way to use this. Look at the price, these candles. Is it above or below the EMA? If it's above it, we've already ran up. Let's wait for a pullback. More than likely, we'll wait for it to come back to the 20-day moving average. Maybe dip a little below. Right here, we came down, and then I'd wait till the 9 goes back up above the 20-day moving average, which we never did. Right here, when the 9 crossed over, after we had a good little pullback, You could have got a call right here. It's close to the end of the day, though. I wouldn't recommend it. But for this lesson, for the purpose of it, this is how you would read your EMAs. And when it's messy and you got lines like every which and away, don't trade. Just sit back and wait for a good day to make good trades. Let's see if we can find some. If we just used just the EMAs, remember the 9 is your yellow, the green is your 20. Right here, the 9 is coming down. We came down right here, which is just a pullback. But when the 9 crossed back up, right here, that is a good confirmation we are going on the upside. And we did. Another healthy pullback right here to the 20. And then more upside. When we're down here to the 200, it's always going to be bearish. Anytime below it, bearish with a capital B. And capital B for bullish if we're up above the 200-day. Now this is a 5-minute time frame. This also goes for the daily. And going by the daily time frame, a lot of institutions buy anytime we're below the 200-day moving average. And if you look, anytime we were below the 200-day moving average, you'd have at least anywhere between a 5 to a 20% return when we cleared and got back to the top. And one of the things that confused me when I was learning the EMAs is we still have our 9, we have our 20, and we have our 200. And we're on a daily time frame. Now, when we go to a 5-minute, everything looks a lot different. Okay? Well, the EMAs are still representing the 200, the 20-day, and the 9-day. But we're going by 5-minute increments in a 9-day period. Now, when we're on the daily, we're going by 9 days on a 9-day period. So there's less candles. These lines are tracking the candles. So the more candles in a 5-minute chart, the more these lines can be more spread out. I hope this helps, and we will be making a video on the VWAP next. Then after that, we will be making one with all of this together and having a 70% accuracy in all your trades. Stay tuned, hit that follow, like, and subscribe. Peace.